Good morning. I just wanted to quickly record a short video, an introduction video on a new journey that I'm about to embark on. I will be attempting the $200,000 funded account challenge with the funded trader. I have not started or taken any trades. I have not done anything on the account as a whole, but I wanted to discuss my strategy and the percentage or amount splits on every instrument that I'm going to be trading. The first thing I delineate on my chart, as you can see, is the Asian session, 7 p.m. New York local time, midnight, and 8 a.m. The reason I do this is to be able to identify the Asia session range, the London session range, and of course trading into the New York session. It's a little bit more complicated than that because there's so many sessions, and that's the primary one that I trade for the day. So of course, starting off with where we are right now, the first thing I'm going to do is identify the highs and lows per session. So taking the Asia session low and technically it's Asia sessions high, and I'll do the same for London. I will basically be using the 2022 model that ICT has created, along with the silver bullet model from 2023, which is essentially looking for liquidity sweeps. So in this example, we can see the Asia session high and the Asia session low has been delineated. The London session high and London session low has been delineated. The first rule, or the first thing that I look for in my 4-point checklist is the sweeping liquidity. In this case, we look to see in the last two sessions going into New York with what liquidity was swept first, and we can clearly see that looking at the London session high and low, the London session high was swept. It's very obvious, it's very clear that the London session high was swept. So that's the first thing that I look for, liquidity sweep. Once I have identified this, once I have identified a liquidity sweep, the next part to what I look for is a displacement to the opposite direction, which in this example is to the downside. So now that we've gotten a liquidity sweep to the upside, I want to see us purge a internal low. I would prefer a low such as this one, purely because it takes out a bullish order block along with a buy side imbalance, which is supposed to support higher prices. So if we take out these two PDRAs that are meant to support higher prices, then it means that we have officially shifted from a buy program to a sell program, in my mind. So that's the point that I will have this low as my market structure shift, watching out to see if we can purge this low. So that's the next part, the third part to my checklist. So let's watch and see how price printed. We're still meandering a bit, and we finally take out this low. So my market structure shift, in my mind, has happened at this low. Now that this has happened, the last part, which is the easiest, is just my entry mechanisms. I have two ways of entering a trade for this specific model, for this specific strategy, if you would, which is essentially a fair value gap or an order block. In this case, since we've shifted from a buy program to a sell program, I'm looking for a CB for an entry, or a bearish order block, which is a last up close candle before an explosive down close one. In this case, we could take this candle as an order block because it's a bullish, it's a green candle basically before a displacement of red candlesticks going down. The same can be said for this candlestick right here, because it's a green candle before the displacement downwards. And of course, to me, as ICT has taught, the most sensitive part of an order block is the tail to body or wick to body. So those are my two entry mechanisms, using the fair value gap or the order block entries. So let's watch and see how we treat how price prints. So already the first thing I see here is a fair value gap. A CB has been created from this candlestick low to this candlestick high. A CB has clearly been created, and my entry will tell me to enter as we enter the fair value gap. So already this third candle, this green candlestick right there, is confirming my entry. Already I would have been entering in this trade, and of course price rallies a bit to the downside. So this is the next part that I would like to discuss while we're here. I will be aiming for 5 handles minimum. So because this is S&P 500, I will be aiming for 5 handles. So at 5 handle run in liquidity, I will take 70% of my trades off and move my stops to break even, or leave it there to see how we treat price, because even if the stop loss was to be tagged, I would have made much more in profit, or I would have ultimately broken even anyway. I say this because whenever I take such a trade, my main target is the previous session's low, because we are targeting liquidity. Since we've purged London session high and we've gotten the displacement that we needed for an entry, the next part is where we're targeting. In my first target would be London session low, then the next one after that will be Asia session low. So 5 handles is just me paying myself as a trader and allowing to see where price can take us to. Of course, we have draws in liquidity. In this case, we have the new week opening gap for this week all the way down here, so we could still leave it to run to that level, but in the meantime we will be taking partials at 5 handles. Let's watching to see how price prints and paying attention to this fair value gap. Assuming that you missed this entry, assuming that you are not here for these candlesticks and this candlestick entering the CB, we can see that we got a retracement back to the entry once more, and price never really went beyond that. So this fair value gap in the form of a sell side imbalance was essentially held as we plummeted. So based on intuition and on price action, I may either take the partials at a 5 handle run, the 70% off at a 5 handle run, or a 10 handle run, because as ICT says during the silver bullet hour, because as we can see obviously this is 10 o'clock right here, this is 10:15 a.m. so it's in the silver bullet hour. So if ICT says if the trade is capable of running 10 handles or more, then it's valid, because you can then be able to take out 5 handles in the process. So of course in this case, targeting London low is about 19 handles, so definitely possible to take 10 as your 70% partial, then leaving the rest to run. Watching to see if we can clearly tell that we purged London low, and as price printed later in the PM session, we also purged Asia low at this point. So this is essentially the entry mechanism that I'll be taking. We did not get an order block entry in this example, but we did get a perfect fair value gap entry, a CB, at that point. and we can see price just kept on meandering from there going into Asia session, but we did get the new week opening gap tagged eventually during the Asia session, during the New York PM session. So that's all I'll be doing. The other part of the video that I wanted to discuss is the actual risk on the account. I will be trading only 3 instruments, in this case 2 currency pairs and 1 indices, which is US 500 or SPX 500 or S&P 500. I will be risking $6,000 per week, with a distribution of 80% going into SPX 500 and 20% going into currencies. The currencies in this case would be GBP USD and Euro USD. When it comes to 80% in dollar amount, starting off with the fact that I'll be risking $6,000 in a week, distributing that across 5 days, it then means that I'll be risking $1,200 per day, and distributing that even further, giving S&P 500 80% of the risk, I will be risking $960 on SPX 500, while GBP USD and Euro USD would be a daily maximum loss of $120 respectively. So there is not much else in the strategy, there's not much else in the challenge, and of course draw in liquidity would be critical in helping identify a proper sweeping liquidity. You may also notice occasionally that I might have true opening prices on my charts during my trading days, because I pay attention to the midnight opening price, I pay attention to the 1:30 true opening price, and I also pay attention to the 7:30 a.m. New York time opening price, especially for S&P 500. I pay attention to just the midnight price and 7:30, which allows me to identify the fake run in liquidity, or the Judas swing in this case, before the true run in liquidity. So you may notice that from time to time, and of course I'll add any other thing that I need to add as the video series progresses. That's all for now. Good luck and good trading.